Hi, I'm Bruno Bianchi. This is SpainNonLucrativeVisa.com, your complete NLV resource. Let's get into it. NLV taxes is the topic that scares people most about moving to Spain. And it's also the topic where bad information online does the most damage. Today I'll give you a clear baseline on what changes tax-wise, the Beckham law question for NLV holders, and the US-specific traps. You will know when you become a Spanish tax resident, what gets taxed, where Beckham law fits in, and the most common mistakes I see. The most common Spanish tax residency trigger is the 183-day rule. If you spend more than 183 days in Spain in a calendar year from January 1st to December 31st, you become a Spanish tax resident for that year. There are secondary tests, center of economic interest, family residence, that can make you a resident even if you're under 183 days. But the 180-day count is the primary trigger. Critical detail: any day with physical presence in Spain counts, regardless of immigration status. Tourist days, layover days, days waiting for your TIE, they all count. Days don't need to be consecutive. Once you're a Spanish tax resident, Spain taxes your worldwide income and potentially the net value of your assets via the wealth tax and the solidarity tax if you are over certain thresholds. Now, what gets taxed? Three categories: earned and replacement income, like pensions, rental income, employment income, taxed at progressive rates from 19% to 47% at the national level, sometimes higher in certain autonomous regions. Investment income, dividends, interest, capital gains, taxed at the savings income rates, from 19% to 30% in 2026. Plus, the regional wealth tax in some regions, which kicks in over 700,000 euros net worth threshold at the state level, with a separate 300,000 euros exemption for your primary residence through several regions like Madrid, effectively zero this out. Plus the national solidarity tax for net worth above roughly 3 million, and the informational declaration of foreign assets called Modelo 720, required if you have over 50,000 euros in any single category of foreign accounts, securities, or real estate. Penalties for failing to file used to be brutal, 5,000 euros per data point and capped, but were reformed in 2022 after European Court of Justice ruled them disproportionate. Today the penalty cap is much more reasonable. Now here's the part many get wrong. Beckham law is not available for NLV holders. It requires relocating to Spain to work as an employee, not as a contractor, which the NLV explicitly doesn't allow. The digital nomad visa is Beckham eligible if you apply as an employee. If Beckham was central to your tax planning, the DNV or another work permit path may be the route, not the NLV. US-specific mistakes I see the most. First, assuming the US-Spain tax treaty makes you exempt from Spanish taxes. It doesn't. It prevents double taxation through foreign tax credits. What you pay in Spain credits toward what you own in the US, but you still file in both countries. Second, failing to file Modelo 720 the year you become a Spanish tax resident because you didn't realize it applied. Third, and this is an expensive one, being liable for Spanish capital gains tax on a home sale in your home country because you became a Spanish tax resident in the same calendar year you sold. Spain has no step-up in basis. Here's the math that scares people awake. You bought your US house for 100k, you sell it for 200k, that is a 100k gain. If you're a Spanish tax resident that calendar year, you owe around 22,000 euros in Spanish capital gains on top of any US tax. The fix is timing. Sell in 2027, become a Spanish tax resident in 2028. Practically, sell on December 31st, move to Spain on January 1st. Calendar years matter, not the precise date you got the visa. Even one day on the wrong side of the New Year's Eve can cost you 20,000 euros. Fourth, assuming all pensions or all types of social security are exempt. Some are taxable, treaty rules vary by income type. And one big tactical recommendation: if you have meaningful assets, investment accounts, IRAs, 401ks, custodian accounts, work with a cross-border financial planner, not just a tax advisor. Tax advisor tells you what you owe after the fact. A cross-border financial planner helps you structure your assets and your move to minimize what you will owe in the first place. If you want to contact my recommended cross-border financial planners, go to SpainNonLucrativeVisa.com. That's it for today. For everything else on the NLV, head to SpainNonLucrativeVisa.com. Link in the description. Subscribe for the next video. If you like this one, please give it a like. And I hope to see you in the next video. Goodbye.